Hello everyone and welcome to another video with Jakar's Finance. Like always, make sure you hit the like, subscribe, and the post notification bell so you will know when we are dropping new videos. Today we are going to talk about one of the cornerstones of business. Today we are going to talk about credit. Yes, credit. Now, credit is one of those topics that seem to get a little convoluted, and it seems to be a level of misinformation and miseducation out there. So today we want to dispel some of that for you. First and foremost, what we're going to talk about is the FICO and the FICO score and what it means and how you get to that 3-digit number. FICO stands for Fair Isaac Corporation, and ultimately it is a 3-digit number that will determine a lot of how you are able to maneuver and go through life depending on what it is that you're looking to do. Most lenders will look at this 3-digit score and determine your credit worthiness along with other factors such as income and other determining factors as well. But for the sake of this video, we are going to focus mostly on the FICO score itself. So ultimately, what we want to do, because the FICO score derives from a 3-digit number that is anywhere between roughly 350, which I've never seen those scores that low before, and I was in the finance industry for over 15 years. But they say it goes anywhere from as low as 350 to as high as 850. And again, I've never seen FICO scores as high as 850, but I have seen them as high as 820, which was really, really high. And I'm going to talk about what that report looked like and why it was the way it was. But ultimately, when you're looking at the FICO score, what you want to try to derive is a FICO score that is above 720. The reason why 720 is an important number is because what I have seen in my time in the industry is that with a 720 FICO score, you're normally going to get lower interest rates relative to what's going on in the marketplace, depending on what it is that you're trying to purchase or acquire, as well as just better overall terms, and you'll have better negotiation the higher your FICO score is. But everyone in essence should shoot for a minimum of 720. Now keep in mind, I've seen lots of scenarios and situations in which people who have 640 FICO scores were able to get qualified for various things. Now, let's take into consideration what it is that we're looking to try to do. If you're looking to try to get credit cards and expand your credit worthiness from a personal level, your FICO score could be lower, but you're going to deal with higher interest rates and your credit limits won't be as high. So if you're in that middle range where it's that 640, 680 midpoint kind of range, you're going to get qualified for credit cards. Again, they won't necessarily be the lowest interest rate, won't be the highest as well. Credit limits won't be as high as they could be. And again, there's other factors that you have to think about. They'll look at various things, how long you've been at a job, what the annual income is for the home, your household, how much annual income the household brings in general. They'll also look at if you rent or own your home. They'll also look at how long you've been at that residence. Some lenders look at employment and how long you've been an employee at that particular company that you work for. If you're self-employed, how long have you been self-employed? And is it the same industry or did you move over to another industry? These are all the things that they're going to look at on a peripheral level, and it's going to determine your credit worthiness. But again, for the sake of the FICO score, what we're looking at is that 720 or higher. Now, obviously, the higher the number, the better the negotiation capability you'll have, whether that's looking to get credit cards, looking to get personal loans, looking to get auto loans, looking to get a home mortgage, maybe even refinancing a mortgage, or even getting a home equity line of credit. Those are just some of the products that you can get. when you're looking at the FICO score. Now, if you are looking to get business credit, it works a little different, but one of the things I always tell people is that you want to have your FICO score as solid as possible. Now, I know that there's a lot of information out here that'll tell you you don't have to worry about your credit score. You don't need to be a personal guarantor. And for the sake of this video, we want to keep it to a certain amount of time, so I'm not going to get too in depth with that. But again, with my experience that I have, I will definitely tell you that the better off your personal FICO score is, the better off the whole picture is going to be in general. It just makes things a little bit easier. So with that being said, that's the first thing we want to look at, is having a FICO score of 720 or higher. Again, it can be lower and you will be approved for certain things, but the negotiation element of it, they're going to have more leverage because of the score being under that level. The second thing you want to look at as well is what type of credit do you currently have. Now, you might be in a position or situation where you have no credit whatsoever, and the reason is because there are people in the world that didn't necessarily need credit to acquire the things that they have. There's some people that pay cash for everything. There's some people who say to themselves, listen, I want to buy a brand new truck and the truck's going to cost $10,000. So what I'm going to do is I'm literally going to save $1,000 a month for 10 months and I'm going to go buy that truck with cash. People do that and they do it more than you think. And that's perfectly fine. But for the sake of this video, what we want to do is we want to use that 3-digit number, that FICO number, to create leverage for us to be able to get the things that we want sooner and be able to use those funds that you would have used to invest in other things that are going to give you a better return on your money. That's ultimately the reason why you want to use credit. Okay? So that's another element that you want to look at and evaluate. Okay? So once you determine exactly what kind of credit you have, the ideal credit mix that I have seen to have a large number of success is you want to have a minimum of 3 credit cards and preferably about 5. Now this is the mix that most lenders really like because it shows that you can handle more than one obligation, and it also would behoove you to have one active loan out. It can be a personal loan or it can be an auto loan, it doesn't matter. But when you look at a credit mix, and that's what most lenders are going to look at, they want to see a credit mix. They want to see that you can handle revolving credit, which is mostly credit cards, and they want to see the fact that you can handle an installment type loan, the type of loan that is paid on a monthly basis. Now, once you have that type of credit mix, the other trinket that you want to keep in mind, and this is a nugget for you guys, is that you want to have a balance on your credit cards of 10% or lower. So in other words, you don't want to carry a balance of more than 10%. So if you have a credit card that is a $1,000 limit, you don't want to carry more than $100 worth of credit on that card at a given time. This will create the optimum level for you when it comes to deriving your credit score, because part of it they use is the credit mix and how much your utilization is. They call it credit utilization, okay? And most lenders love to see you in that 10% or lower category. Now, if you're the type of person that says, hey, I'm not really great with numbers, I'm not going to remember all this, then in essence, what you want to do is use the credit card, and at the end of the month, you want to pay off the entire balance. That way, it's a zero balance going into the next statement, and you don't even have to think about, oh my God, did I use 10%? Did I use 7%? Did I use 3%? 15%? What did I use? If you don't really have the time or the patience or the wherewithal for that, just go ahead and pay those credit card balances off. And in that way, when the new statement comes out, it'll show that you have a zero balance and your credit utilization rate will in essence be zero, which is also phenomenal. Now, What I also want you to keep in mind is that if you have an active loan out and you go to pay it off, it will show a paid off balance and it will reflect on your credit. Now, when it does that, you'll see credit movement. Normally, it'll be an increase in your credit score. Now, depending on what it is that you're looking to try to do and looking to try to accomplish, you have to keep in mind that lenders look for very specific things. So let's say you're the type of person that says, okay, listen, I think I'm ready to buy a house. I have the means. I have the deposits. I have money saved in case, things were to go wrong or if there needs to be repair on the house. You have all this stuff in order and you have your credit mix in place. What you want to do is you want to make sure that when you are presenting your application to whatever lender that it is that you're putting your best foot forward, meaning that you're putting your credit in a position for it to show at its maximum level. That's what you're looking to do when you are looking to acquire new credit. And it really doesn't matter what it is. It can be a credit card, again, it can be a new car, it can be a motorcycle, a boat, a house, whatever it is, it doesn't make a difference. You always want to put your best foot forward. So let's say, you use your credit card and you need to make the payment and the payment isn't quite due yet. If you have the means and you have the money available, go ahead and make the payment ahead of time before you actually go and put in that new application. Because what happens with some credit card companies and some lenders is that they will actually report the information prior to the statement balance coming out. And that's important to know. That's another little tidbit, another little nugget for you. There's things that can happen where if you pay a balance before the actual statement, you can have the credit card company or the lender, whoever the creditor is, report the updated balance on your credit report so the new lender can see that that is reflected on the credit. Okay. So again, these are just some of the basics when it comes to FICO and understanding how credit works and how to use that 3-digit number, because it's so important. It opens up the door for you to be able to acquire so much more and doing it in a leveraged position where you are able to then be able to acquire things in a quicker, faster level without expelling too much of your capital. Hope you enjoyed the video, guys, and like always, make sure you like, subscribe, and hit the post notification bell. Until next time, we'll see you in the next video.